It's hard to imagine the world of investing without thinking about South Africa and the great companies that operate in the domestic environment. Andrew Ditburner is the Chief Investment Officer at Private Clients by Old Mutual Wealth. And we'll also talk to Tasneem Samodien, who is a research analyst with the business as well. South Africa is surprisingly good at producing high-functioning businesses in a deeply dysfunctional environment, Andrew, and there's some great investment opportunities as a result, right?
Yeah, there absolutely are. I mean, if we look at, obviously, sentiment right now is very low locally. And if we look at, what the market's done this year or last 12 months or so, it's been lifted probably by what we call your non-resource rand hedges. We know who they are, the likes of the Richmonds of the world. Process NASP is back in favor, and we've kind of forgotten about the other parts of the market, which many of us refer to as SA Inc. Commodities, resources have also struggled this year with what commodity prices have done. The outlook, China's reopening hasn't been the big fanfare that everyone had hoped it to be. And then you look at the SA Inc. Sentiment, as we say, is low. But wow, there's some fantastic businesses that operate in the SA environment. And I think there's some great opportunities. If you just look in the banks this year, I think the top performing bank is First Rand. It's up, 14, 15, 16%. And you've got Capitec down 14, 15, 16%. So there's a big dispersion, that's opening up between banks from an investment perspective. That's creating some opportunities, So if you think of, great businesses or South African businesses that have done really well, we can sit here and, talk about them for a very long time. But a Capitec's, a very good example of that, down 15%. Perhaps there's some really nice opportunities for investors to get exposure to some world-class businesses that operate in a fairly difficult economic environment at the moment.
I mean, one doesn't have to be an idiot to think about South African companies as great global investments. I mean, companies like Capitec and others over time have outperformed their global peers by a country mile. Do they continue doing so? What are you reading in your tea leaves or your spreadsheets?
So we apply our investment philosophy consistently, whether we're looking at local equities or global equities. And a quality investment philosophy, we look at the business model, we look at financial position, financial performance. But what has been particularly relevant in the South African context has been the ability of businesses to withstand the gravitational pull of what has been a very poor macroeconomic performance. And we refer to those companies as companies that are able to, develop and create their own economies, new innovative products and solutions. And you're right, South Africa has some great businesses, and we can look at all of the industries and pinpoint, I guess, who's been winners and losers. We don't have time for all of them today. But the first one, I guess, that will stand out and probably comes to mind first is the likes of a Shoprite.
Now, if you said to an American investor, let's think retail, they go Amazon, or they'd go Walmart, or they go Costco, or they go any one of 100 American options because America is great. Yet you look at little Shoprite, and I say little, it's relative to some of the American giants. It's an astonishing performer relative to most of those, right?
It is, and it really comes down to management execution of a particular strategy. So if we look at Shoprite, for example, they've had, the rebranding of Checkers to target upper LSM customer. It's very difficult to execute on a rebranding. They operate the most successful online delivery grocery platform locally. We've seen their peers globally struggle to really get grocery delivery, to take off. Shoprite has done that quite successfully. And then they also operate a very efficient, I think a world-class supply chain. We've seen their peers struggle to execute. I mean, I don't have to mention names, but you know how the peers have performed in trying to execute on that supply chain. So they've done really well to execute. And even though South Africa has not performed economically, I think Shoprite has more than survived as a group structure. They've really thrived in that type of environment.
Where their competitors were having dalliances in Australia, they were focusing on the core business of running an efficient retailer, building distribution centers, focusing in on the basics. And by doing basics, you set up a long pipeline of success. It's hard to also imagine a global retailer, clothing retailer, perhaps being more diversified, more efficient and more effective than a Mr. Price, for example.
That's right. Mr. Price has also been, one of those businesses that has generated and really developed their own market if we look at the past 2 decades. We consider we talk about the lost decade in South Africa where there's been no economic growth, but Mr. Price, for example, has really expanded their business. So they're not only clothing, but they have a very meaningful Mr. Price sports business. The Mr. Price home business has the largest market share. So they've taken their brand, and while their peers, have done international forays and lost a bit of shareholder money, they've really doubled down on the South African exposure because that's the business that they understand. They did go into Africa and, a bit of Poland exposure, but they made small bets.
Yeah.
So they haven't lost, I guess, as much capital. And it's that capital allocation, it's the ability to sustain returns on equity and invested capital, throughout that period that we rate Mr. Price very highly in that peer group.
You don't get much more local than bricks and mortar because you can't move them, you can't put them anywhere else. You don't get more local either than storage solutions as well. And there's a company called Storage, very distinctive in the city centres where they operate. And they're focusing on global trends, but in a domestic environment. So whether people are semigrating, emigrating, they've noticed divorce rates going up and people are splitting up and getting separate containers to put their stuff in. An economic sweet spot, which is amazing.
I think storage is a really great real estate has been out of favor locally for at least the past 5 years. And storage is a good example of a company that has also been impacted by that negative pessimism, but has done really well and been really innovative. So like you say, they've taken self-storage, from the outskirts of towns right into city centers because they identified that there's times in our lives where we need to store our excess belongings for whatever reason. But on top of that, they've also developed proprietary technology, software that they are able to now scale globally. So they also have a platform business. And as we know, Uber, Airbnb, platform businesses are can be very successful and generate high returns on capital. So they've been innovative within the real estate space. And maybe haven't been given the credit for doing that. So that's another business that we think has value.
A couple more themes I just want to pick up on. Education, and everybody aspires to do better, everybody aspires to do well. What's been a surprising performer for many, many years is Advotech. They're in private schools, they're in private universities, or private tertiary education rather is probably a better way of putting it. Why do you see an opportunity for them in that space?
I don't want to be, pessimistic, but I think we know the concerns with education locally, from a government perspective.
But with every concern comes an opportunity for somebody to exploit. And Advotech seems to be well positioned to fill a gap that's being left by an education system that's letting young people down.
I think what Advotech does well is tailor the curriculum for, subjects that parents are looking for their children, adding the robotics, adding an online school, making it hybrid. And instead of just increasing their fees, they've also really looked at the business and taken out excess costs, focused on their efficiency, made the classes more efficient in order to achieve market-leading returns. And they've also, optimized their capacity instead of, just building out more schools. I think they've been more targeted in their approach.
We've spoken a little bit about Capitec, enough about Capitec. I think insurance is always an interesting business. Buffett built his empire off the back of insurance. Many billionaires have done so. The business of PSG starts out in financial services with an insurance arm attached to it. But OUTsurance is an insurance outlier in that they do have a small Australian operation. Many South African companies actually very successful around the world in terms of being able to quantify risk and measure. Victor Mpunga talking about the fact that, in the world of pharmaceuticals, you've got to go to where people's pets are. OUTsurance is where people's pets are, for example. They touch parts of people's lives, the fear points in people's lives. People want to protect against downside risk, and OUTsurance has been particularly good at that as a relatively new listing on the JSE. An interesting opportunity.
OUTsurance has actually been in our portfolio for quite a while. It's a business model that we really like, but I think what really stands out about insurance is that they removed the pain point of insurance, for themselves. So what I mean by that is, I think one of the biggest risks of short-term insurance is if your claims exceeds your premium income and your investment income. What OUTsurance did is incentivized consumer behavior in their favor. So, they give you an out bonus if you don't claim. So what they did is they reduced their claim book, which reduces the risk of their book overall, allows them to price more competitively relative to peers, so they keep taking market share while the customer feels like they're getting something out. I think it was a win all round, and it really shows that if you have an innovative, business model, innovative strategy, that you can really win in a market that is not really growing as fast as we would like in the South African context. And then taking that, that's why they've been successful in Australia and hopefully will be successful in Ireland as well.
The majority of their business is domestic, yet they're boxing above their weight from an investment opportunity point of view worldwide.
I think that comes down to the skill of our management teams, but we already know that South Africans are highly rated, I think, internationally. And I think we see that now in the ability of taking those local businesses, taking those local lessons into offshore markets. We do know that, locally we do struggle with economic growth. And at the end of the day, even though we look for these businesses that are able to create their own economies, we do understand that economic growth is a tailwind, for revenue and earnings. So we don't blame these management teams for, taking what has made them so successful and try to scale it into offshore markets. We do think that they can become global leaders in their own right.
I know a guy who wrote a book about that. Tasneem, thank you very much indeed. Andrew, thank you very much indeed. And Victor, thank you also for your insights when it comes to the healthcare sector.